Hello and welcome to UK Property Accountants. My name is Chirag, an analyst in the marketing department here at UKPA. Today we're taking a look at the basics of inheritance tax and a few tips that you should know about. Joining us today we have Merisha Shrestha, a chartered certified accountant with the ACCA. She's a member of the client services team and the tax team as a senior associate here at UKPA. Welcome to the show, Merisha.
Thank you, Chirag.
Before we get into all the nitty-gritty of the stuff, could you please tell us a bit about what exactly inheritance tax is?
Yes, of course. So, inheritance tax or IHT is a tax on the estate of someone who has passed away. So, it includes property, possessions, or money, and it's usually charged at 40% above a certain threshold, which is currently £325,000.
When it comes to the liability of taxes, I understand it's different for all the different kinds. Who exactly is liable for inheritance tax?
For that, we have to look at the individual's domicile status. So, individuals are generally considered domiciled in the country where their roots are, and it's different from the residency status. So, the individuals who are domiciled in the UK, they are subjected to inheritance tax on their worldwide assets, but the individuals who are not domiciled in the UK, they are subjected to inheritance tax on just their UK assets.
So earlier you mentioned about how individuals are liable for inheritance tax on transfer of their assets. Are there different kinds of transfers with different rates, or is there just one rate for inheritance tax?
No. So there are actually three main types of transfers. So is it okay if I explain you with an example along with the rates?
Oh yes, please, that would be perfect.
Okay. So the first one is the chargeable transfer. So to give you an example, so let's say the individual transfers their assets into a trust, so that will become a chargeable transfer, which means that it is immediately charged to IHT at 20%. Okay. So the second one is the potentially exempt transfer. So in this type of transfer, the 7-year rule will apply. So let's say if the parents give their house to the children, that becomes a potentially exempt transfer, and it's not chargeable to IHT immediately. But if the death occurs within 7 years of gifting the asset, at that time the inheritance tax will be applicable, and that will be at 40%. And other one, which is the third one, it's the exempt transfer. So on this type of transfers, as the word suggests, it's exempt. So to give you an example on this, I would say the transfers from one spouse to another spouse, or civil partner to another civil partner. So any transfers, they are exempt.
Okay, just for a clearer reminder, could you please tell us what the rates of all these three transfers are once more?
Yeah, of course. So first one is the chargeable transfer. The rate is 20% immediately. Second one is the potentially exempt transfer. So the rate is 40%, but it will only be charged if the death occurs within 7 years of gifting the assets. And the third one, exempt, which means that there will not be any IHT on that.
So I understand, Merisha, that the general rate for inheritance tax is 40%. But you mentioned earlier about how chargeable transfer has a 20% rate for inheritance tax. Is the rate different, or are there any other additional taxes when opting for chargeable transfer? What exactly is going on here? Why is the rate so low?
There is actually. So the chargeable transfers are the lifetime transfer. So that's why it is charged at 20%. But the 7-year rule, which we discussed in the previous question, which was for the potentially exempt transfer, it also applies to this chargeable transfer. So if donor passes within 7 years of gifting their assets to a trust, and then the inheritance tax will be charged at 40%. And the initial 20% which was paid, it can be deducted from that 40%. So in altogether, it's 40%.
So the 40% doesn't change, it's just about when to be paid for and if the person does not pass away.
Yeah.
Earlier, you mentioned about exempt transfer, with spouses or civil partners getting exemption from inheritance tax. Are the exemptions also applicable for other individuals, or is it different?
It's different actually. So, as compared to the married couples or civil partners, it can be difficult for other individuals on their transfers to reduce the inheritance tax bill, or I would say fully exempt. But the individuals can utilize certain reliefs and exemptions so that their potential inheritance tax, which could be charged at 40%, it could be reduced. So, to give you an example, I would say annual exemption, which is £3,000 per annum, small gift exemption, which is £250 per annum per individual, and there are marriage exemptions as well. So one can utilize these types of reliefs so that their inheritance tax bill is not that huge.
Merisha, most taxes usually require you to file them within a certain time period, and failure to do so usually results in penalties. Is it the same for inheritance tax, with penalties being applicable for failure to file it?
Yes. So, as with other taxes, there are filing requirements and there are payment requirements as well within a certain time period, and failure to do so will result in penalties. But for inheritance tax, there are different types of transfer which we discuss. So, there are different due dates for filing the return and payment as well. So, if I have to give you the initial penalty for late filing, it's £100. And then if there is additional delay, then there will be a daily penalty of £60, though the penalty cannot exceed the total inheritance tax liability.
Merisha, thank you so much for joining us today. You've been a great help to us as always. Inheritance tax is a very complicated tax, and big savings can be achieved with the right tax planning. If you're looking for professional advice on inheritance tax, please feel free to give a call to our team members. We offer a 15-minute free discovery call where we ascertain your situation and let you know of the services that you need. Thank you and have a great day ahead.